presentation contains current opinions of Moez Ansari, Chief Investment Officer of Compact Asset Management, a registered investment advisor, and are subject to change. Nothing in this presentation should be considered investment advice. We make no assurance that Mo's opinions or illustrations will accurately predict future prices or financial markets. In no event is past performance a guarantee of future performance. A detailed disclosure can be found at the end of the presentation. And now here's Mo.
Hello everyone, and welcome to the Compact Market Wrap YouTube update for November the 4th, Election Eve 2024. I'm Mo Ansari, President of Compact Asset Management, and thank you for joining me today. Let's start. First of all, make sure you subscribe to this channel. Just click on this, on the subscribe, so whenever I do an update, you will be notified and you can watch it with all the charts and the graphs and everything that is happening in the markets. Looking at the markets, as I mentioned last week, I think we are going to get a little bit of a pullback here in the markets. We're expecting some election anxiety, and 75% of the people feel that we will not get an election result tomorrow night. And that is expected. The slow count, the close election, there might not be a decision or a clear-cut winner until maybe 4 or 5 days later. That is creating some anxiety in the market, and that's what we're getting right now. Last week, the market was down 1.35% for the S&P, down fractionally for the NASDAQ, and the Russell was up, which was a good sign, and the NASDAQ was down. That's what we saw. The Dow was down fractionally, and we saw the Russell, which was up, which is a good sign overall in the market. So looking at the best sectors, communication services, that's Google and Meta, and basically on Google earnings, and we saw earnings from Amazon. They were better, and that's helped the consumer services. Technology overall was the worst performing sector last week. We're looking at oil, which was down slightly. Again, the things are calming down in the Middle East, or at least that's what we're hearing right now, so we'll have to wait and see. Interest rates continue to move higher, and that is something that we're talking about, that we went through the 4.3, and I'll show you the chart. That was the resistance area. Next resistance is 4.49. And that, I think, if we get some anxiety over the election, we could see the bond market also go higher. We're looking at the bond maturity wall. This is a number of commercial real estate loans that are coming due. There's an expected whole bunch of loans that are going to come due in next year and the year after on this. So we could see quite a bit of maturity coming in 2026. In 2025, you can see that we're looking at this, and then we're looking at this. So we're looking at quite a bit of high yield notes coming. These are notes that were done. Interest rates are locked in for 4 or 5 years in 2020 when the rates were zero or very close to it. And now we're seeing they'll have to be refinanced, and that could put some pressure on the real estate markets, especially the commercial real estate market. Something to watch. Not a lot of economic data coming out this week. We have the non-manufacturing ISM, which is, again, a big part of the U.S. economy. Expected to be not a big change. Same thing as it was, a little bit lower than what it was last month. Last month we saw 54.9, so we're expecting about a 1% drop. Initial claims, factory. So the big thing this week is obviously the election. So we will see how that goes and how the market reacts to it. As I've said, there's a lot of election anxiety out there. There's a lot of cash that has been taken out of the markets. The markets are expecting a muddled result, or at least not a clear result tomorrow night. If we get a clear result, whoever the winner is, I think that would be positive for the market. If we do not get a clear result, it is something that we're waiting for the vote count, and it's too close to call, and we're going on for days. That would create some anxiety, and I think a lot of people, there's a lot of cash that has been pulled out. Even institutional investors have pulled out money out of the market. If we do get a clean election or a clear decision one way or the other, whichever way it goes, I think the market, that would be positive for the market overall. Looking at the technicals, we've broken through the 20-day moving average. We are pushing towards the 50-day, which is 53.07. Today we're trading at 53.25 this morning, right around there. I think we are going to get this is the third wave pullback. We're starting to see the fourth wave to the downside, and we could see some a little bit more looking at this. I wouldn't be surprised to see a test right here of 5,600, 5,615 is the 20-week moving average. That's where I think you've seen since last October, we've come here a couple of times and banked, I went back and forth a couple of times here, tested the 20-week moving average and bounced off of it. So I wouldn't be surprised to see a test of this 56, which is about 100 points lower than where we are, not a big deal. But if we break below 5,600, then the next support comes in at 5,275. That's, another somewhere around 200, 300 points lower. So we could see that on the downside. On the weekly NASDAQ, we've broken below. On the NASDAQ chart, we've again gapped lower today, which is not good. This is a gap on the charts. They do not overlap. And we've gone through the 20-day. Next support is 17,950. But looking at the weeklies, it's 17,800. We're about 8,240 today trading there. But overall positive. If we do break below here, then we could see a test of the 16.6, which is another 1,500 points lower than where we are right now, approximately. So I do expect some volatility in these markets over the next couple of weeks until we get a clear decision on the election. 75% of the people are not expecting a decision tomorrow night. So a lot of this might have already been built into the market, the election anxiety. Once we get a clear decision, then we could see quite a bit of money that is sitting on the sidelines, $6.5 trillion as a matter of fact, could start coming back. Yields, we went through this resistance area of 4.29, which was right here. We went through it on Friday. We're back down below it today, trading at 4.299 or 4.3. Next resistance is right here, which is 4.9. I would not be surprised to see a test of that in the next few weeks. But if we start getting above that, then we've got 4.43, 63, which is here, and then 4.737, nearly 4.75, which is here. I think somewhere around here we should find some resistance around 4.5%. Also, there's an expectation that the Fed is going to lower rates by 25 basis points. But since the Fed has lowered rates, we've seen the interest rates go up. So the market is a little bit concerned. No matter who wins, everybody, Harris and Trump, both have talked about spending programs and giving tax breaks to their own side or whatever it may be, but that money has to come from somewhere. So we will have to see, is it going to be deficit spending? Are we going to raise taxes? Both of those taxes are going to slow down the economy, obviously. You're taking money out of the system. And deficit spending, the money you have to borrow. Then lenders might say, look, if you're going to borrow this much money, you have to give us higher interest rates. That could be also push rates. And I think that's what we're seeing right now. Crude oil bouncing up a little bit today on news that Iran is saying that it's going to have a complex attack on Israel. I think that's a lot of talk because Israel has degraded a lot of their defenses, their air defenses, and if Iran does attack Israel one more time, I think Israel will have a clean opportunity to take out the nuclear facilities and also attack the oil infrastructure, and that is why oil is pushing up today. It's up about $2 a barrel at 71.5. That's what we're seeing today, up about $2 at 71.5. So we're seeing a bounce in this oil market because of the increase in anxiety. We are seeing small caps up a little bit today, holding right around this 215, which is a 20-week moving average. As long as we stay above that, we're okay. But we need to break out above this sort of flag formation. We came up from here. Now we've gone sideways for about a month and a half or so. We need to break out above this 230 area, head towards this 245, the high that we made about 2 years ago. And if we can get above 245, then we could head to this target of 260 to about 285. That's the next window that I'm looking at, if we can break out above this resistance area right here, which is around right around 230, the previous high. Gold had the big day, as I mentioned. We are seeing a fifth wave top. We're coming down to the 20-day moving average, which is 27.18. Break below that, 26.50 or 40. I think 26.50 would be a good place to take a look at the gold market. Again, we'll see how the election goes tomorrow. If we get a clear-cut winner one way or the other, that would be good for the market. If we get a muddled decision tomorrow where we have to wait for the votes to be counted and a lot of anxiety, a lot of talk from both sides, who won, who didn't, and all of that, that could create some more anxiety over the next week, week and a half or so. But again, I would view that as an opportunity to buy, because I think whatever pullback we get, as I mentioned at the beginning of this month, we could get some pullback going into the middle of this month, and that's what we're seeing. But those are on the daily charts, fourth wave pullbacks, and then we start the fifth wave to the upside. Those are my thoughts. Those are my observations for today. Don't forget to subscribe. Just click on this button right here, so whenever you get an update, I post an update, you'll be notified. I will be back with you next week. Happy voting. Until then, good trading.
This presentation contains the current views and opinions of Moez Ansari, Chief Investment Officer of Compac Asset Management, a registered investment advisor. The views expressed are current only as of the date of this presentation and are subject to change. Nothing in this presentation should be considered investment advice, and nothing is personalized to any investor's individual circumstances. Compac Asset Management offers investment advice only after entering into an investment advisory agreement and gathering client-specific information about goals, objectives, financial status, and risk tolerance. This presentation uses terminology associated with technical analysis and provides charts to illustrate some of the concepts discussed. Technical analysis is a security analysis method with the goal of forecasting the direction of prices of securities or market indices through the study of past market data, primarily price and volume. We make no assurance that past performance or the use of technical analysis will accurately predict future prices. Further, a risk of technical analysis is that over-focus on historical patterns could lead to ignoring or downplaying security-specific concerns, overall market or sector concerns, or other factors, because we assume inaccurately that historical patterns will repeat themselves. In no event is past performance a guarantee of future performance.